So in this video, I'm going to be talking about the high-profile fund manager Neil Woodford and how his fall from grace has led the FCA to potentially change some of their rules. Find out more in this video. So here's an article that I was reading today by the Financial Times, and the title was FCA heads say fund rules may need to change after Woodford meltdown. Now, just to give you a little bit of backstory. So Neil Woodford is a high-profile English fund manager who used to work at Invesco before going on his own and setting up Woodford Investments in 2004. So he was very well known and probably one of the highest profile investment fund managers in the UK, and that's how he kind of built up the reputation that he had through making a lot of high yield investments through his funds that were making a lot of people a lot of money. So that's why he decided to go on his own, because he was doing so well and his name carried so much weight in the industry. So the head of I'm just going to read the first line. The head of the UK financial watchdog has said the rules around investment funds may need to change in the wake of the meltdown of Neil Woodford's flagship fund, which suspended investor withdrawal last week. So I'm filming this on the June the 10th, 2019. So what happened was that Woodford paused withdrawals in response to poor performance, leading to many investors asking for their money back. So there was a lot. His funds were performing poorly, and a lot of people were getting scared and wanting to pull their money out, and that kind of created a little chain reaction. And what he found was that because lots of people were trying to pull his money out, he wasn't able to liquidate the money fast enough to give these investors their money back. So he had to suspend withdrawals just so that he could find a way of liquidating some of these assets so that he could pay some of these guys back. Now, at the peak of this fund, they were making about at the peak of the fund there was about 10 billion. It was worth about 10 billion, and now it's worth about 3.7 billion at the time at which it was froze. So this shows how much the value has been shaved off since in its decline. So he was really making some bad investments, but the cause of this was that the main cause of this seemed to be that he was investing in illiquid assets such as properties. So what Neil Woodford was doing was that a lot of there's actually a rule by the UCITS. Don't ask me what that means, but I know what they do. They're basically the regulatory body for investment funds. And there's a rule that says that you can only invest in about 10%. 10% of your fund could be unlisted stocks. And what Neil was doing was that he was investing at a higher rate than 10% in unlisted stocks. And the way he was getting around this was that he was listing some of these illiquid assets in the Guernsey Stock Exchange. And so what he did was that listed them in Guernsey, where they wouldn't be traded. There was no liquidity to these investments, but at least they were listed so that they wouldn't count as unlisted stocks. And but the problem was, because there was no buyers on the other end. You know, stock exchanges is basically an auction process. If you can buy a stock, but if there's no one on the other side you can buy a stock, but if there's no one on the other side to buy it back off of you, then you're stuck with it. And that was what was happening when you kept trying to liquidate these assets. There was no buyers on the other end to buy these assets. So that caused a kind of chain reaction when a lot of people are asking for their money back and no one can really get it because he can't liquidate the stocks. He kind of put himself in this predicament by trying to skirt around the rules and invest in a lot of illiquid assets. So he's kind of only got himself to blame. But it's quite interesting, this, because I opened the Hargreaves Lansdown account a couple years ago, and one of the top promoted funds was Woodford. His name really carried a lot of weight, and a lot of people were using his brand to kind of his brand was being used to sell certain funds, and he was doing well up until now. It just looked like he tried to play the system, and for the most part he was doing it successfully, but you're only allowed to break the rules as long as you're successful. And now that his funds started capitulating, now they're actually looking into how he was getting around these rules, and it looks like the FCA might want to tighten up some of these rules for open-ended funds so that this doesn't happen again, because there's going to be a lot of people left with their pants down if they are not able to liquidate their assets in time, and it's going to cause a chain reaction. The more people that pull their money out, the worse rate he's going to be able to get for these stocks, because buyers on the other end will know that he's not in a position of power, so they can offer him a lower price than what he would normally sell it for in the market. So that means that these investors will probably get a lower rate for the rate of return, or even a loss for these stocks, because buyers on the other end will always want a discount if they know that you have to sell. So it was just a little article I thought I'd cover. It's quite interesting because anyone in the UK that kind of reads up on investments will know about Woodford, and it's crazy how someone's fourth grace can go so fast just because of something like this. But this has been years in the making. It's only just come to light now, but this is something that that's been tipping over for some time now. So anyway, that's Any, aka the Not Trader, signing out.